Inland Revenue has begun a crackdown on tax debt, which has risen to nearly $7.4 billion. The department has warned it'll be increasing enforcement activity this year after it received a financial boost from the government to strengthen tax compliance.
The tax department got $29 million in the budget this year, $116 million over 4 years, to collect tax from people who should be paying it but aren't. I'm Alexia Russell, and today on The Detail, how is it going to spend that in order to pull in a projected $702 million? And who should be watching out?
IRD says it will use the money on tools and people to get its audits done, and accountants and tax experts say they expect to see a real step up in activity, and everyone should be looking to get their paperwork in order.
Everyone from students, criminals, shop owners with electronic ways to cheat the system, sole traders whose books are a mess, cleaners, gardeners, landlords, people who try to avoid banking systems by using cryptocurrency, and
builders. You've been warned. The tax auditors are rolling in.
One of the big ones is construction, because there's been a focus for several years there, and they're just amping that up a bit. It has had a big downturn just lately, so it's probably from some businesses' perspective this isn't a great time for a crackdown, but they have been signalling for some time that it's coming. They say that they know construction businesses are struggling with increased costs and the availability of materials, and some of them might be behind because they have financial trouble, but they say that some are just actively avoiding their obligations, and those are the ones that they're going for.
RNZ's money correspondent Susan Edmonds says Inland Revenue gets nearly 7,000 anonymous tip-offs a year about cash jobs, and the construction industry is the most often reported.
They say they took a softly approach during the pandemic, but that's now changed. Last year they had a campaign aimed at construction businesses, and this year they're taking a firmer approach. And they've also started doing site visits, which might have been a bit alarming for people to have IRD randomly turning up.
I think there's irritation there that tradies comes up in the conversation about those who don't pay their tax.
That's Malcolm Fleming, head of the New Zealand Certified Builders Association, who'll tell us later in the podcast why the construction industry is sick of always being in the IRD's sights. But first, Susan Edmonds has been looking at who else is in IRD's spotlight.
They say, 40,000 construction companies have outstanding debt, overdue tax returns or both, and then they're going to text 2,500 of them asking if they want support to get their outstanding tax sorted. I mean, thousands of people are probably not really sure what to do in this situation, I suppose. Being charitable, they've probably just got into a situation where things have got ahead of them and they just have lost track of it. But, I mean, I think another interesting point is that the GST debt has increased such a lot. It's gone over the course of 1 year from 1.9 billion to 2.6 billion. And you might have to think that that's probably businesses using that money to keep themselves afloat rather than paying their GST as they should.
Yeah, but you can see from their point of view, can't you? Say if you've got someone that needs wages and you've got no money in the tank, that's what you'd use that as a priority, wouldn't you, rather than making that person redundant if you could avoid it?
I would think so, because business continuity reasons, at least, you'd want to keep your staff if you possibly could, because once you let them go, it's hard to get them back if work does come in. So I know that it's not what you meant to do, but I can understand why people might decide that that was the best thing to do if they had money set aside to pay GST. And then they thought, I really need that. You could imagine how it snowballs out of control, I suppose.
The hidden economy, interesting that they're going to attack this. But does this involve more than your average IRD officer poking around? I mean, are they going to bring in fraud experts and people who can trace things digitally?
Yeah, I was actually surprised at how large the hidden economy work is. In 2018, the tax working group said that the space that the IRD would look at for this was things from, cash jobs, when you're paying your cleaner with cash, but right through to, income from Airbnb or people selling services and goods for cash or not paying their workers properly so that they would avoid tax. And at one point they were doing some hidden economy work on real estate agents and how they weren't accurately claiming expenses, and they were putting things like their hairdressers' appointments through the business and things like that when they weren't meant to be. And there's also some work on liquor stores that they started, I think, last month, where they went to 220 liquor stores around the country and found more than 100 employees were being paid and had PAYE taken from their wages, but that wasn't given to IRD. So, it seems that the hidden economy for them covers Everything, really. Anytime that you are kind of operating outside the realms of normal tax-paying activity.
I mean, sometimes it would be hard to trace, wouldn't it? I mean, if people are complicit in both offering and accepting cashies, it's not like they're going to go blabbing.
No, that's right. Sometimes there are benefits to both sides, and then, you're not incentivised in any way to turn anyone in. But in some cases, it is sort of exploitative. I think in the liquor stores case, some of those people who were being paid taxed, but then their tax wasn't going to the right place, there was no win in that for them. They were just being taken advantage of to a certain extent, and often, apparently, it was family and things like that were being involved in those situations.
Yeah. Cryptocurrency, how is that a big tax avoider?
Oh, it sounds like it's a bit of a nightmare, honestly. I think one of the things about crypto is that, people think it's, untraceable if you want it to be, but, you still have obligations to pay tax on any money you make. And IRD has said people aren't as anonymous on the blockchain as they might think. I'm not sure exactly how that works from IRD's perspective, but they have identified, I think it was a 250,000 New Zealanders who've made 7 million crypto transactions worth nearly $8 billion. And they say there's significant underreporting of income from some of those people. And it could be just that maybe those people haven't thought that maybe they need to pay tax on that, but that might be charitable. It could also be that they just don't want to pay tax on it, obviously. But any time that you're selling, trading, exchanging for the purpose of making money on something like that, you're meant to be paying tax.
Yeah, I mean, cryptocurrency billed literally as the way to avoid anyone noticing that you're doing business.
Right. Yeah. Yeah, you can imagine that people didn't think IRD was going to come knocking onto that stuff.
Electronic sales suppression tools is something else they've mentioned. What are those?
Yeah, this is really interesting. Apparently these are quite widespread overseas, but we don't really have them in any huge number here yet. They're a device or software program that is designed to falsify the records of your point of sale system to lower your tax bill. New York apparently has introduced a bill that would make the use of them a felony, but they basically just allow a business owner to make it look like they've made less money than they have. So it's almost like just taking cash payments under the table, except the customer might not even know that they were being used in that way.
And organised crime, I find this quite interesting. How are they going to help, pull in the cops for that one? That's the felony that put down one of the biggest gangsters in history.
Al Capone was one of the most infamous, one of the most notorious criminals in American history. But it wasn't his violent crimes, of which there were many, that got him sent to prison. It was his taxes.
Are they looking to do the same thing?
There's an information sharing agreement in place between Inland Revenue and New Zealand Police. In 2014, Police Minister Anne Tolley and Revenue Minister Todd McClay introduced this agreement that they said would help fight serious crime. Police will be able to request personal information from Inland Revenue when they have reasonable grounds to suspect a serious offence.
I mean, if they're successful in these sort of things, we're talking organised crime, electronic sales, cryptocurrency, we're looking at prosecutions, aren't we?
Yes, they've said that the construction companies that are still avoiding their tax should expect to have to find themselves in court, basically, if they don't get their act together. And they're talking about, you'd see people going to prison, things like that. So it's definitely, it's a pretty hard line.
How real is the threat, though, because our courts are clogged? We don't have the judiciary or the legal fraternity to deal with all this all at once. It could end up being a very long, drawn-out process.
It could be. The other week, I think it was a Friday afternoon, we had 3 press releases in one go from them about people who had been sentenced mostly to home detention, but they had been sentenced over tax dodging issues. So they are taking action. I guess these things will work themselves through eventually.
It's a scary thought for people, isn't it, being audited? Because even if you're not guilty of anything, you've got to sit there and traipse out 7 years' worth of material that you may or may not have kept or been able to put your hand on.
Yeah, when I was freelancing, I was always terribly worried about getting audited because I'm not very good at keeping receipts. And I'd be like, I haven't done anything wrong, but how would I prove that,
One way to get on top of it is to use digital platforms such as Henry, Xero and MYOB, or you could get an accountant. Susan actually has her own one of those at home. She's married to Jeremy Tauri, a tax and business advisor who works for Plus Chartered Accountants in Whangarei. He deals with Inland Revenue on a day-to-day basis, but he says it's getting harder to get hold of anyone there.
I think what the IR do are sort of trying to push people more into their digital services platform. We have found it hard to contact IRD on the phone, and we're kind of pushed more towards the MyIR platform and email correspondence, and there are sort of lags on and wait times on the phone if we're trying to contact them in that way.
And that used to be an advantage of having an accountant, didn't it? That you had a secret phone line and somebody would pick that phone up.
Yeah, we do, and we still do have the tax agents line, but I think over the past couple of years we haven't been able to get through as quickly as what we'd like to. They have upped the services, though, on their MyIR platform, so you can apply for instalment arrangements now through that platform, submit information, but they usually have a turnaround of 15 working days. That's the kind of the standard line of when they'll get back to you about the information exchange back and forth.
3 weeks, that's a long time to carry out a conversation.
Yes, it is.
And they're talking about, for those who flout the rules, time's running out, we've got the tools, the data, the analytical capability, but do they have the people?
Well, yeah, I guess with with the extra funding that's coming in, they'll probably find them. I think we're certainly seeing more contact with people from IRD around some of the audit activity now. So I guess over the last month, we're seeing an increase in that activity. So they are reaching out and saying, hey, look, we're going to be reviewing this industry, flagging the industries that they're going to look at, and then sort of diving down into a few taxpayers in terms of audits and reviews. So we are actually seeing that starting to happen. I know they've been indicating it for a while, but I think audit cases are up something like 20% now. So we're seeing a bit more movement in that area for sure.
It's a fact of the way the economy works that people are going to be prepared to pay cash to someone that doesn't want to declare it.
You probably wouldn't ask your GP or your lawyer or your accountant, much for cash. But people feel no qualms about doing that with their builders. And so I think that the public should take just a little bit of responsibility about that.
If you are getting paid in cash, you're not going to be, if you're GST registered, paying the GST on that income. Yeah. And you're not going to be paying the income tax on that income. So if you're at, say, 30 or 33% tax rate plus the GST, there's 40-odd% of tax there that's not going in the tax system to invest in our police service, our healthcare, roads, teachers.
When cash jobs are mentioned, tradies seem to feature in the commentary more often than we would like.
Malcolm Fleming, defending the country's most reviled industry when it comes to tax dodging.
Part of the problem is that anybody can call themselves a builder. And so those at the lower end of the building chain who are not aligned to a trade association, who are not using contracts, nor running contracts through their books, look for a competitive advantage. So really needs to be a bit of a plea to the general public or homeowners to ensure that they go to a professional builder. Homeowners aren't going to their accountant or their dentist and asking for cash jobs, but they seem to think that it's a way to go for tradies. And for those professional builders who are the majority, those aligned with trade associations, those who run contracts and have proper businesses and infrastructure, it's really annoying if they miss out on a job due to somebody who is providing a cash option.
Well, more than just annoying, isn't it, Malcolm? Because it can be devastating.
I'm being polite. It's becoming quite poignant at the moment as demand has decreased for new building work.
Concerns about failures in the building industry are beginning to be backed up by statistics. Nearly a quarter of all liquidations last month were businesses from the building and construction sector.
So a lot of the builders, suddenly they're having to think about the smaller jobs, and they could be, the decks or a small little renovation or a fence. And it is in that sort of area where sort of the lower level operators do the work and they come across the cashier equivalent.
Suddenly they're competing with people who are familiar with what the tax department calls the hidden economy.
I think there needs to be a whole education and a shift in the mindsets of the general public in their approach to asking tradies, or anybody else for that matter, what's the cash equivalent. It can open up a whole world of hurt.
Legally, any building work worth more than $30,000 has to come with a proper contract, and that protects both the builder and the homeowner. It also leaves a paper trail, so the builder has to do everything on the books. Under that, though, is often cowboy territory. After all, anyone can set themselves up as a tradie or call themselves a builder. But Malcolm points out that if you agree to a quick cash job, say for instance to fill a hole in a wall, and it goes wrong...
Any job, and a cash job is worse because it doesn't go on to any invoicing, doesn't go on to a quote, it isn't producing any paperwork. That hole you've just asked me could have been actually lead to something much worse. You filled a hole which underneath it had some rotting material which you filled in and suddenly couldn't breathe, and became to manifest into a massive problem that down the track caused an issue. And the trade would have no comeback on that. It didn't exist. No guarantees would be void. All sorts of manner of things could occur.
And our accountant, Jeremy Tolry, says those cowboy operators have no future.
We do have these conversations with business owners who are struggling with people being, outbid on work through price. But generally what we see is they don't last very long because, sometimes we will see those operators not able to pay their tax or their GST, and if the IRD are clamping down on that sort of stuff, then, they end up disappearing. I think the tradies refer to them as cowboys that come in and are doing jobs, getting the work, but maybe not planning for things like taxes, or then have problems paying suppliers, and then are on stop credit, so they sort of vanish. Yeah. So it's business is a long-term game. We need to think, 10, 15 years ahead and look to that level of vision, for a business, rather than just sort of the next year.
It's all very well until you can't get any work and you're not putting, food on the table. Meanwhile, some of the good guys are going under.
Yes. And some of that is probably because they haven't been able to provide also through the good times. So when I talk to people, we need to think about, not about just sort of making money for the period where times are good, but we need to also think about where times are not so good and actually put some money away, because at some point you might need to put that back in. We've seen it before with the 2008 recession that we had. There were times where you took nothing or you had to put money back in. So I think if you've been through that, you kind of know what to expect when times get tough. And I think the key is planning to ensure that you have a buffer that you're able to not only earn for yourself, but also sort of put some ahead for you for the future as well.
Malcolm Fleming says tradies get into trouble with the tax department because basically their books are a mess.
The most common way that builders get in trouble with IRD is not setting aside their tax obligations. That's the biggest issue. I think it is fair enough for the IRD to be looking at off-the-book payments. I think that is appropriate. They should be applying the same methodology and targeting right across the board. For those businesses who are legitimately running a good commercial operation and pay their taxes, and who for a variety of reasons have got into trouble and are unable to meet their, say, terminal tax requirements, I would like to think that the IRD applies some flexibility, much in the same way that they did to a broad range of businesses after the GFC. For legitimate reasons, we're struggling to pay their obligations, and they could make arrangements for their payments.
Yeah, they've said, though, in this latest press release, no more Mr. Nice Guy, which I presume means that if you've got, for example, here's a scenario, you have got money put aside to pay your GST, but you have no work, no work ahead of you, you've got an employee, you use that money to pay your employee so that they stay on with you and so that they don't go hungry. It's a really difficult choice for people to make, and you sort of almost can't blame them for making that choice, can you?
Yeah, and some of them are quite inexperienced. So if I think about builders, for example, often the only qualification they have, and the qualification they need to be an NZCB member, is a Level 4 New Zealand Certificate in Carpentry. And that is often the only qualification they have. So they don't go to business school. And often the people that they get to run their companies, which often is a life partner as well, likewise doesn't have so they fall into these sort of potholes. They're new in business, so they don't have to pay tax in their first year, and all of a sudden it just all catches up with them. So recognising that, what we're doing at NZCB is providing some Business 101 workshops just on the fundamentals, and one of the fundamentals is around finance and how you set yourself up. How do you pay GST? How do you organise your cash flow appropriately and start forecasting? A lot of people don't plan either. So a lot of it is to the education to the builder. But there's a real distinction here in our conversation between professional builders, the sort of people that I represent, and those who are more at the lower end doing cash jobs. A professional builder shouldn't be, I'd be alarmed if they were operating cash jobs off their books and without contracts. Hundreds of thousands of people are employed in the construction industry in New Zealand, and the majority of them are good commercial operators running projects through their books and paying their way, paying their share of tax for New Zealand Inc.
I think there certainly seems to me that people who deal with this stuff every day have a misconception about how easy smaller businesses in particular might find it to get on top of their tax obligations. If you're at IRD and you're dealing with this all the time, it's second nature, I suppose. But for lots of people starting out or not totally sure what they're doing, I think, it can be a bit foreign and worrying, and they do need to make sure they're getting good tax advice.
A lot of them are swimming, basically, in amount of paper.
That's right.
Or worse, digital information that they don't know where to access.
That's right, yeah. So I think, having a good tax advisor you can trust is helpful. I was speaking to someone earlier in the month who was saying that the number of insolvencies that were caused by tax debt was increasing quite a lot, and that was probably going to continue. And I think this is a recession where businesses are really hurting, and I think we probably will see more of this to come.
That's it for today. The Detail is a newsroom production supported by RNZ and New Zealand On Air. This episode was engineered by Jeremy Veal and produced by Gwen McClure and Davina Zimmer. Thanks to Susan Edmonds, Jeremy Tauri and Malcolm Fleming. I'm Alexia Russell. Mā te wā.